Hey guys, Alchemist here. I hope you all had an incredible week and that you enjoyed the video that I posted on Thursday. As mentioned, you are going to be seeing a lot more of my face on the channel, and I didn't get too many comments about exactly what you'd be wanting to see more of in terms of content. So please do let me know in this video below what you'd like to see on the channel, whether it's more educational videos, whether it's trade recaps and market outlooks, or if you want to see more training or financial fundamentals or self-mastery sort of personal development sort of things as well. So today's video, we're going to be going over a trade recap during the Asian session. This was something that we went through with the members on our weekendly backtesting session that we had yesterday. So we do have 2 live sessions with the members every week, one on a Wednesday night, Sydney time, and then a Saturday morning session as well. And make sure you do watch all the way to the end of the video, because there is something that I'm going to be announcing with a more affordable sort of option for people to get involved with Millennial Wealth Group first, to then upgrade to the full membership later. So now let's remove everything on these charts and go to a blank chart. So I'm going to replay some price action. I'll just go to about there, and then we'll go back to the weekly and I'll sort of frame up exactly what we were looking at here. So in terms of the weekly, we should all know by now that the 2 things that we need to be doing is identifying our most recent supply and demand levels. So this here was our weekly demand that we had tapped into. And in terms of supply, it was the upper portion of this wick here. And also, please let me know if the having me in the corner here is helping, or if it's getting in the way, what sort of your thoughts are, because I'm not 100% set on it yet, and I'd like to hear your feedback. So we can refine that there to the week. There's our weekly supply. This is our weekly demand. We'll go back down to the daily time frame now. In terms of the daily, if you have seen the previous video, this was the daily breaker structure. And the daily low had been swept so many times, but we never actually had a candle close below. And we're yet to actually close below as well. So this remains to be the daily low. And the daily high, of course, is the highest point here after having a bearish pullback of greater than 110 pips. So this here is our daily high. And that's all that we need to do on the daily. Now, when we jump down to the 4-hour, we must refine these lines straight away and identify our most recent 4-hour breaker structure, 4-hour high and low, premium and discount, as well as our points of interest. So this here was our 4-hour boss, because we did have a candle close below, as opposed to the daily where it was just a wick. So this was our 4-hour boss. The daily high is also our 4-hour high, and our 4-hour low was confirmed after we had a bullish pullback greater than 90 pips. So this is 4-hour low, 4-hour high, 4-hour boss. Drop our premium and discount tool. Beautiful. And they're sort of similar zones to what we were looking at in last weekend's, the video that I posted on Thursday. However, let's just mark out the POIs again. As always, the easiest ones to spot straight away are the extremes. We can take the unmitigated portion of it. So this here is still yet to be mitigated. And then we can see that this part of this wick here, this also remains to be unmitigated. And it's actually swept liquidity above these highs. Beautiful. Along the way down, we have this zone, which we can see we've recently tapped into. We also have these buy to sell wicks. Okay. And we should know by now, whenever we are drawing supply zones like these, we need to be identifying the corresponding demand level, which supply interacted with and then caused the demand failure. Essentially, that is confirming that supply is in control at this point. So the demand here that we had flipped was this wick. The demand that we flipped here was this wick, which led to this high. And when they're at the extreme, they don't have to have interaction. And we have this demand here, which obviously interacts here. Then we have this very large wick above, which has also swept liquidity and created a supply zone. We have this as a supply zone. This one. In terms of demand below, we have this, which is also swept liquidity below this demand zone. And we can always just start all the way from here. Beautiful. So this one here is yet to be mitigated. All the above have been mitigated and are forming a demand chain. But this here is a little bit of inducement above this zone, which we may be coming towards later in the future. A couple more zones. See here, this is a flip. And we can see this one here. Beautiful. So there are all the zones there that we've drawn out on the 4 hour. And if we look at this here, 4 hour is bearish. In coming back upwards, we have been very corrective. So if we just drop this tool here, we can see that the return up has been very corrective as opposed to how much of an impulse we came down with. Again, that's just showing that the momentum at the time is heavily bearish. And the idea here is the expectation of order flow is for price to return to a supply zone in premium, to then have a 15-minute change of character to turn bearish in terms of order flow, to potentially be taking out this 4 hour low and continuing the trend of the 4 hour, which is shorts. But we're yet to know that, right? However, once we do get our signal to enter short, that's just added confirmation because it's in line with the overall trend. So that's all that we need to do here on the 4 hour. We'll jump down to the 15-minute. And the 15-minute on this time, it was quite an ugly range. And on Monday, there were no trades. So this trade that we're going to be looking at here is Tuesday. Monday was New Year's Day in the US. So it wasn't really a very good time to be trading at all. But the market still did provide. So this here was our 15-minute boss. Our 15-minute low is just the lowest point below there. And of course, our 15-minute high was confirmed after we had a bearish pullback of 22 pips. So that didn't occur for quite some time. We had to wait all of this time here without having a 15-minute range. But once we did have that pullback of greater than 22 pips, then we did confirm that our 15-minute range was solidified. So looking at this here, let's just make this a little bit neater. So this was the 4 hour demand. I've refined the other 4 hour demand down to this 15-minute demand. And let's now identify some other POIs. We have this as a supply. When interacting with the supply, we have these buy to sell wicks as a demand. We have the extreme supply above, which was mitigated here by this candle, which is swept liquidity, which was swept further down there. Beautiful. Along the way down here, we do have this as well as a supply zone. And if we drop our premium and discount, we can see that this was the sort of first demand within discount. So this portion of it at least, because not the whole POI was within discount. And the idea here is that whilst 15M is bullish, we should expect that price once it breaks above, we have a bearish retracement down to a demand zone in discount, wait for order flow to shift to return to being bullish, to then take longs to take out that 15-minute higher, potentially to be tapping into this higher 4 hour supply before seeing if price wants to continue and take out the 4 hour high and switch to being bullish, or whether at that point 15-minute would realign to be in line with the 4 hour being bearish to let us take out the 4 hour low. But again, we don't predict, we just react to what the market provides us with. So at this point here, there were no trades to be taken within here or within here. So what we were looking at here is if price was going to be coming to that extreme POI below to then take a long from. Okay, perfect. So one candle too far. Let's go down to here now on the 1 minute. We've now mitigated that 15-minute demand, which is the extreme of the range, and it's in discount, so it's well priced, and we're looking to take longs. When we look at this here, the supply zone that we'd be targeting would be this one. Okay. When we do go down to the 1 minute, we can look to see if we can refine that further on the 1 minute. So once tapping into here, we want to be looking for our entry model, but before that even, we want to be seeing some sort of evidence of liquidation. Now, I'm not going to be sharing the liquidity models that I've built specifically for AU in this video. If you did want to use them and to be able to master this pair as myself and the rest of the Millennial Wealth Group has, you do need to join the course. But there are 6, and we need to see at least one of them occur before then taking a trade. So this here satisfied one of the liquidity models. And then after that was satisfied, we still needed to see a 1 minute change of character because we want to be taking a position pro trend sort of to the 1 minute time frame, right? We don't want to be taking, we want to wait for 1 minute to realign with the direction that we're looking to enter. So if we're looking to take a long, we want to have a 1 minute bullish chalk before entering long, and wanting to take a short, we'd need to see a 1 minute bearish chalk before taking a short. So the bullish chalk that we'd need to see occur would be, this would be the liquidity grab, and the highest point above here, we'd need to see this close with a body close above, personally for AU, to confirm that change of character for me. And this here, this is at 12:50, so this is 50 minutes into the Asian session. So now all we're doing is just waiting for a body close above, which we have just received. And then we will take this candle here as a supply zone. And looking at this, when we've interacted, we have this as the flip, which caused the supply to fail. So this was our demand flip. And we can be looking to take an entry off 25% of this zone, as well as the extreme. Because this extreme here is so little, I'd be happy to just take it with these sort of candles here, so the sell before the buy, especially if this was to be able to give me a 2 to 2.5 pip stop loss, which it perfectly does. All right, so we can have an entry set there, and then we can have our main entry that we're looking to enter here off the flip. And so this one here, we can look at 25%. We'll see if 2 pips will cover the low here by 0.3. So the low of that candle is 767. So we'd want to be 764. Even that, we've got an additional 0.1 pips, and that's still allowing us to be at 2 pips. So at this point, I could either not do that. I could either, wrong chart, 1 minute, sorry. I know we're still in Pepperstone. Apologies for that, guys. Where were we looking? Over here. You're about to see how the trade started out, but that's okay. So we could either, what I was saying before that occurred, was that we could either push the entry up 0.1 pips, so that would still be covering the low by 0.3 and would allow us to just have a little bit of extra opportunity to get tagged in, or we can just leave it there and cover the low by a little bit extra. I'm happy to just leave it there with a 2 pip stop loss, and we'll have our partials at 4R, of course. And then in terms of targets, we will have a look at that 15-minute supply above, and we'll see if we can refine that down. So this was that 15-minute supply zone. Looking at this here, right, we can actually just see that there was a bearish chalk occurring here. Okay, so if we look at it like in that sense, we can see that this here was a demand zone. This here was the flip. This is an inside bar, so technically on the 1 minute, it's not so much swept liquidity as per my rules. It would be if that was a 15-minute candle, but it just does add a little bit more confluence to this spot in particular. So this here would be a supply zone. So we could do two things. We can have a look at 25% of the range, or we can target this here supply zone. We see in this case here, it corresponds quite well. So I'm happy to just be taking it at 25% of the supply zone, which actually coincides with that refined 1 minute flip zone, which we did have a look at just then. So in terms of targets, the overall target would be there, which will give us a total R of 13.7. And then again, what do we want to see? We want to look for places along the way which could cause some sort of a reaction, so that we can expect price to potentially be reversing from there. And if it does give us a 1 minute bearish chalk, not to get so worried and want to end our trade early, but at least just let it run a little bit further, knowing that we could have actually expected price to sort of have some hesitation when it reaches there. The other thing we can notice here, which is an added confluence to our long, is the sense that we're building a lot of trendline liquidity here. Okay, but in terms of where could sort of give us some hassle along the way, we can see that this here is a supply zone. We could potentially have a reaction from this one here as well. And the reason why I've chosen those two in particular is that they have swept liquidity. So let's have a look now how the trade ends up playing out. So at this point here, our partial would be taken, meaning we are risk off on this trade in 20 minutes. If you did want to look for confirmation entries as well, you can see here, potentially if price returns to this sort of zone, you play that with 2.5 pips. Okay, and we're arriving at that supply zone, which we knew we could sort of expect a reaction from. Once price is now pushed up and interacted with this supply zone, I'm going to be taking this limit off because I don't want it to be coming down from this zone and potentially be sweeping this before returning to being bullish again. This is also now able to be taken off. So we're just in the one position. We have now broken above this supply zone, which we were expecting could potentially have given us a sort of reaction at the time. And let's see if we have any sort of reaction at the next one too. Again, yes, we can see that we did sort of pause there for a few minutes. Essentially, we did break that supply zone. And now we're heading all the way up to our take profit, which gets hit quite nicely for a total of 13.7R. And that was achieved in the span of 49 minutes. And if we do take 75% of that, because we did take some partials along the way, so 75% of 13.7 is 10.275 plus the 1 from the 25% at 4R gives us a total of 11.275R. Now, personally, I use 0.5% risk on every trade. It's more than okay to be using 1% risk, which would give you an 11% return on this trade. And again, the math is very easy to do. If you are using a funded FTMO account, which I am giving you a money back guarantee that as long as you follow my flowcharts, within 12 months, you will be funded. That would equate to $11,275, which you keep 80% of. Okay. So it's very simple, and this exact model repeats itself in the market over and over and over again. So there's so many opportunities to be entering. This was actually on the day after New Year's as well. So especially when a lot of traders, including myself, took some time off from the charts, it's just further evidence that the market will always provide opportunities, so that there's always a time to be getting involved. That doesn't mean we trade every day. We only trade when our rules and objectives are met. But so long as they are, then we have the opportunity to enter. So if you've made it this far in the video, thank you very much. If you have been taking some value from the channel, I will ask that you comment, like, and subscribe if you haven't already, just so that I can continue to provide more content in the future. And the other thing that I did also want to announce is that in a couple of weeks' time, or hopefully by the end of next week, I've got a new Discord up and running, which will be outlooks for AU in terms of Asia and London, end of day markups, previous webinars from the Millennial Wealth Group course, as well as one live Q&A for everyone that's a part of that Discord there. This is going to be a very low cost sort of entry model. It will be $10 per week, charged monthly, and will allow you to have one-on-one session, sorry, not a one-on-one, there will be a one-off Zoom per week, which will be a Q&A. So you can provide questions throughout the week, which will be answered in that session, as well as having outlooks completed for AU, for London and Asia, as well as a recap of all the trades that I have taken and previous webinars from the course. So have a look for the video that I'll be posting next week, and I will be creating a waitlist to get involved for this. If you are interested, please send me a message on Discord or email me, both of which are in the description of this video below. And I look forward to speaking to you in the next video. Thanks, guys.